Good afternoon. This is Alan Rosenfield, Managing Director of Harmony Asset Management, with a brief market update. And for those of you who know me, yes, I said Alan Rosenfield speaking and brief in the same sentence. Last October was our last video cast, and at that time we said we were concerned about increased market volatility. The following 2 months, we saw a 20% drop in the broad market averages. Now this year, we've gotten a rebound, about 12% on the markets. So the real question is everything fine now? And what are we thinking about going forward? The one thing that the markets seem to be ignoring is earnings. Fourth quarter earnings have not been as good as prior quarters, and more importantly, first quarter guidance has been quite weak. We expect this is going to continue for the next 2 quarters. And the reason is what made for very strong earnings last year was a combination of tax cuts, a global economic recovery that was coordinated, and weak US dollar. This year, however, tax cuts are over. Europe is actually very close to a recession. China is without question slowing down. On top of which, with that leading to lower interest rates abroad, the dollar's gotten stronger, which is a headwind for any company doing business abroad. So we're going to have a tougher time with earnings. The second thing is that 2020 is an election year. And therefore, if the Fed needs to raise rates at all, they have to do it this year. Next year, they're going to be worried about looking like they're being political. So if the economy continues to be strong in the US, and so far we've seen no signs of a recession, then it's likely the Fed's going to have to raise rates this year so they can get it done before next year. So what are we doing? We think that the first quarter, where we've been long the whole time, is going to peak here fairly soon. And therefore the second quarter could have some weakness. We're expecting to take some profits, and have actually done a little bit of that already at the end of the first quarter or in the second quarter. Then if we do get weakness in the second quarter, there will be a chance for a rally later in the summer, because before an election, Congress tends to spend a lot of money to keep the economy going. So there may be a chance that we'll see a rally into the end of the year. Our models are based very strongly on fundamentals and technical indicators, though. So only if those confirm our expectations will we actually make those moves. But that's our plan and expectation at this point. Thank you for listening, and as always, if you have any questions, feel free to call us or email us.